welcome one and all. And I'm going to go through today talking about emotions and planning and why we do what we do and how to be smarter than most retail traders and investors. So if you can see, you will remember from Friday that the US job news came out terrible and it was all bad, and as a result of which everything tanked. So the S&P came down, the dollar came down, you name it, it all came down. Stocks came down, gold and silver went up. Can anybody tell me why that happened? Why did gold and silver go up whilst everything else fell? What was the state of the market at that time? Anybody know? And I can't find the chat box now. Exactly. Alexi says flight to safety, and then Khalid says risk on, risk off, and Dan says safe haven. Well, not for the USD, Danny, but it's safe haven away from the USD, really, and against the US stock market and against riskier assets. So money flows into gold and silver at a time when everything else is turning to the messy stuff. So this is what we mean by a risk on and a risk on off environment. And I've explained many times before, we used to be in a risk on environment for 6 months, 12 months, and then Trump comes along and it literally can change within the hour. So it's really quite insane. However, when the news came out, and again, I am trying to get my mouse from that screen back down here. When the news came out, I sent a telegram to my investing group and I said, and here I'm going to share with you some of the tips I gave them as to what they could do if they wanted to buy. But as ever, this is not financial advice. But this is what I said. Bad US jobs report and Trump causing yet more tariff chaos. The markets have gone into risk off mode, namely money flows back into gold and silver and out of most stocks and crypto. Time to sit back and let it play out. On top of which, as Tierney's talked about on Sunday, August, September are usually slow with the markets, but Trump can change that in a heartbeat. And then also, this is the important bit. This is all about the emotion that goes on. So on the time when everything crashed, you will get so many people will have panicked and sold. And I said in the second note, you can see here, folks who a week ago thought they missed the boat with crypto. So when crypto went up and Bitcoin was up at 120,000, there will have been lots and lots of people going, oh, I missed it. I knew I should have done it. And I spoke a month ago when it was at 105, 106, and I said there were lots of clues it was on its way to 117 to 20 range, and that I thought it would resist at 120. So at 120, you've missed it. Oh, crap. Missed Ethereum. I explained about Ethereum, about the Trump funds coming in, Galaxy, all the ETFs and the big money flowing into Ethereum, and explaining I felt that Ethereum was on its way to 4,900 again. And this was last week when it was about 3.8. And I had lines set on my chart saying, I hope this thing drops. Well, whereas most people then go into panic mode and running around with their hair on fire and say, oh, it's the end of the world, the market's crashed, I knew I should have sold, etc. Then the smarter operator is the one that sits there and goes, thank you very much, I could just able to buy something at a discount. I then went on to say to folks, if I was completely new and I was buying now and I was starting with 10K, and what I meant by that is if you were going to spend the 10K then, when Bitcoin was down at about 113, I would put 2.5 into Bitcoin and 2.5 into Ethereum and spread the rest on my A grade portfolio. And I will go through that with you again in a moment. And I have shared this with you here, although it is part of my investing group. And I also spoke about if I was starting to buy crypto related companies. And one of the benefits with crypto related companies is that, well, you've not got all the messing around with wallets and all the hassle that goes with it. But one of the things is that from a tax perspective, in some jurisdictions, it is a way to own crypto tax-free. Now, I'm fortunate enough living in Portugal. If I hold my crypto for more than a year, there is no tax, which is brilliant. But there are not too many countries now that will allow that to go on. But there are a lot of countries, and I think the USA is one of them, where if you hold stocks for more than a year, your tax bill is halved. And in the UK, there is a tax system called the ISA, where any gains that you make within that are tax-free as well as. The downside with Portugal, for example, is if you earn more than 80,000 a year, you are suddenly on 48% tax, and therefore you would be very slow to sell anything anyway. So that's what I explained. And then I was talking about crypto related companies. So I would put 5K into Coinbase. And if you're not sure the reasons why, go back through previous posts and videos, and I'll show you where to find them in a minute. 2.5 into MicroStrategy, and the rest into Riot, Wolf, Galaxy, and Mara. And also, if I was buying mining stocks, 10K, I would put 2.5 into AG and EXK and less into HL and MUX, as ever, not financial advice. So the point of it all was I was waiting and hoping that the price would drop. And then the other thing you have to note with all of this nonsense that goes on all the time, and this is why we never trade NFP, and I tell you not to trade NFP, it's when they start looking at the data in more detail, the experts, the analysts suddenly turn around on the Monday and say, you know what, actually it wasn't so bad. Or when the data comes out to be really good, there was times in Biden's presidency, often when most of the jobs that were created were to do with the government. And this is a strange thing around the world because the UK is the same. You have the government, the civil service is expanding all the time, and yet AI around the world is removing jobs, but not in the government. And of course, in the Biden area, they were employing more and more. And then sometimes as well, I can remember where we had a jobless figures came out was great, but then this is why you also look at this figure. It turned out that of this particularly good jobs report 2 years ago, that when they started to dig into the quality of the jobs, and what they do is if you read the reports, they break it down into sectors. And it turned out on that occasion that most of the new jobs were part-time in hospitality and the average wage is lower. So not good, because remember, the three things that we use to value an economy: interest rates, inflation, and growth. Interest rates at the moment and inflation don't seem to be paying too much attention, but growth is the big one. Everybody is what. So that's what went on. All terrible, the end of the world. Cryptos crashed and the dollar was down, as I say, and everything was down except gold and silver. And then by Monday morning, so this is the Financial Times. I get a free subscription to this publication. I do not recommend it. I find it to be amazingly wokish still, which is quite strange for a supposedly right-wing paper. But also they are so bad, and I've mentioned this before, their reporting on crypto is infantile. And unfortunately, most of the people that read the Financial Times who add comments appear to be infantile as well, as certainly lacking in any knowledge at all. But anyway, so he says, okay, the US jobs figures was bad. And he goes to talk through it, and the total payroll's down, change in thousands of people, and revision from before, bad, 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 bad. And then he said, crucially, given the unemployment rate also went up and the industry composition, the jobs load, sometimes, so the industry figure tells a somewhat less dire tale. The light blue figure is the amount of jobs created for government workers. So, for example, in February, March of 24, half of the new jobs that were created were the government. Similarly, in the January, and most of these periods in the Biden administration were government jobs. What happened in the recent ones? Less government jobs, a drop in government jobs. And this is what Trump was doing when he brought Doge in and said, right, we're going to stop wasting money. We're not going to expand the amount of public sector workers, and we're going to get rid of a chunk of them. And so this article then goes on talking about that. And then he goes into it in more detail and cyclical and all the rest of it. But this goes on all the time with this news related to markets. Scare, tactic, panic, and the other side of all of this as well. And I spoke about this in the webinar on crypto back in 2020. I was explaining with crypto that once the big boys came in, the BlackRocks and Jamie Dimon's mob, once they came in, yes, that would bring a lot of money into the crypto world, which would be good for those of us who believe in it and who are holding it. But on the other hand, they would love to manipulate the market, and the expression being to shake the tree. And so anybody who bought recently or has been hanging on and it got to 120 and rejected, suddenly within a day we're down at 112, 113, which I had also predicted and said it wouldn't surprise me at all if it came back and retested the flag pattern from before. But at that point, when everybody starts to panic, this is what these big companies specialize in, because, okay, guess what? They are the ones that are going to go in and mop it up. Now, this week, Ashley will be going through with you about Forex. But this week, the big event of the week is going to be the British and their official bank rate, etc. Do not be trading around that. Now, one of the other things when it came to the stock market, I did not sell my stocks. Having said that, I did explain to you that after the bounce in April, when I bought the blue chips for the first time, I sold 75% of all of them, more or less. And I went through the figures with you in a previous one and said, look, when the S&P got it back up to 6,000, to me, this was getting overpriced. I was not comfortable. I'd make 25, 30% in a month. I was taking most of it off. And the reason being then is if we got a crash, it's not going to kill me, it's not going to hurt me, and I've still got some skin in the game if it keeps going up, which it is doing at the moment. And if you've been looking at the results that have been coming out, they ain't been bad. And some, I think it was Meta the other day, their prediction was way, way better than expected. And so it's starting to appear that the money that the FANG stocks have been spending on AI is actually proving to be a decent investment. And Palantir was one of those that I think took 70% off at the high, has now shot up again because their results on the last quarter were insanely good. So we have this mixed scenario going on all the time still, that government data coming out bad, and yet the stock market still going up. Yes, the PE ratios are all over the place, but the results in this last quarter thus far have not been bad at all. Now, as I mentioned here, this is Tiennis's post, and Tiennis was talking on Sunday about August and September, and they can be very flaky normally. Normally, the markets go to sleep, and so this is the other thing about taking partial profits, whether it be stocks, crypto, Forex, or whatever. This is why we always look to take partial profits. With crypto, I look to take out my initial stake. You will probably find this next 3-4 weeks, probably, that things will be quiet. However, with Trump, and he doesn't seem to sleep and he doesn't seem to take holidays, he still has the ability to cause absolute mayhem, in which case things can go the other way and become completely unpredictable. So, moral of the story is be careful. Don't be greedy. Take partial profits. Now, I mentioned earlier, if you want to see my previous posts, anything to do with live training sessions like we're doing now, you'll find them in here. But also, if you scroll down here, then you will see all of my recent posts. And going back to July, well, what were we doing? I was talking about in May, why I bought more crypto and gold, why and how. I spoke also in May about could Bitcoin be going to the moon again? And remember, I think it was about 103, 105 at this point. I also talked about what crash. I had a great month. Again, for me on Friday, yes, my crypto came down. Yes, my stocks came down, but my gold and silver went up, and my mining stocks went up. So again, you're trying to balance everything that you're doing all the time. And looking back through these posts, if you go back and have a look, I explained all of this. And if you put the time and effort in, and unfortunately most of you don't, and are too busy, don't get round to it, can't be bothered. But if you go through this, this is a course in itself, and it will give you the clues on how to react and how to plan going forward and how to react next time we get a panic move. And I say these panic moves are going to keep coming, and they're going to keep throwing at you. This was all about how the big money was coming in. This is Lutnick, the American, something to do with finance, saying that Bitcoin is gold. And then Bitcoin to the moon. This was the one I spoke about before. I linked to the crypto. And if you go into here, the first unit in here, you will find the recording from the crypto presentation I did in 2020, when I said that I thought it would be the best investment in your lifetime. There is a course on from MIT that costs $100,000 for free on YouTube, if you can be bothered to spend 20 hours watching it and really understand it. And then I was talking about Paul Atkins, why I bought more gold and why and how, and crypto. And I bought Bitcoin at 105, which I would never envisage at one point, although I did use the profit from the smaller ones, which is what I tend to do. And I was talking about high yield income and all the rest of it. And then here on this 29th, I said that I thought that Bitcoin could go to 117 next and Ethereum to 3,450, which worked, which was a flag pattern. Now, I predicted it again the other day, and the flag pattern at the moment has broken, but I am still of the mind that Bitcoin is going to 130 next. Not financial advice, but that is what I think is going to happen. And again, why is Ethereum up today was all explained in there. So educate yourself, go back through why I believe in the crypto boom, etc. This is Lutnick, and this is a link was in that article. He's explaining Trump's Bitcoin strategy, and all of the people around him are holders and very pro crypto. And then the new SEC chair as well, talking about how it needs to be properly regulated. Now, these are some of the reasons why I certainly didn't panic the other day. These are the top holdings by public companies in Bitcoin. And Strategy, the top one, is MicroStrategy. They own 628,000 Bitcoin, valued at 46 billion, is it? I must get confused with all the notes. Mara Holdings, which is one of my smaller, remember back to the Telegram group, they are a Bitcoin miner. They also, like a lot of the Bitcoin miners, are diversifying. They are the second biggest holder of Bitcoin. They make the stuff. They have rigs that are churning it out, not as much as pre-halving, but when the price is up, they don't have to sell as many to pay for all their operating costs, and therefore they can hold more. 21 Capital I am not familiar with. Riot is another one of my smaller ones, and Galaxy Digital is a new one in terms of they are spending a fortune on Ethereum ETFs. And then CleanSpark, one of my private guys, Forrest, he rightly called a good M2 breakout on that last month. Coinbase, and I explained again in detail the other week why Coinbase is my biggest holding. Tesla, I don't see anything positive with Tesla at the moment, but that is the bigger holdings. And then up here, this also gave me confidence. 2 weeks ago, one of the original whales, holder of Bitcoin from the earliest days, they released and sold $9 billion worth of Bitcoin. Under normal circumstances, that would, and in previous history with Bitcoin, that would have caused a major drop. And you know what? It hardly moved. So again, they're buying big. This is Strategy. Strategy, what he owns at the moment, what they own at the moment, purchases. This is all freely available. The last buy that they reported, and they're doing it every week, the last buy they paid $117,256, and they paid $118 prior to that as well. And their average cost now is up at $73,200. So the big boys are in. I told you about that Japanese hotel investment group who also are aiming to own 1% of the total supply of Bitcoin. So the demand is there. And this is another FT article. Well, this one's written by the ex-chancellor of the ex-financial guy in charge when David Cameron was in power. I mean, he was involved in an austerity package and he has no record to be of any value, really saying anything, but he's now being paid by Coinbase as an advisor. But he is saying, what he is saying is that the UK have over-regulated crypto so much, and he's kind of giving a point of view saying that really need to get their act together, which I do understand, but I mean, he's opening himself up for criticism. And then I look in the comments and you think, well, here we go. Who's the first one that's going to mention the tulip bulb crash? And here we go. Amsterdam 350 years ago. These people don't get it. And if you are in that camp at the moment, I urge you to educate yourself and understand what is going on and why. I also explained the other week about the benefit to the American economy, because for every stable coin in circulation, they have to hold US bills, and they are buying T-bills for which they are gaining interest. And so the likes of Circle, they're recently IPO'd, I think they have 5 billion of stable coins at the moment, which means they will have an equal amount of treasury bills. So the stable coin issuers make money on the spread. So when you buy or sell, there is a spread involved, just the same as buying and selling anything else. So they're making good money on that. And then they're making money on the 5 billion that they parked at probably 4.25% on short-term T-bills. So all of that I have explained ad nauseum. And some of you had to sit through this for so long. And then the other thing, oh, this guy again, I think this was it. They always talk about, oh, it's just a Ponzi scheme and it's money laundering and it's dirty money. Well, this is from the Bank of International Settlement, and they are very, very, very anti-crypto. And this is one by the UK government. So they were saying that 10% of adults own crypto. They've jumped through all the hoops and managed to be able to buy it as well. An estimated 22 billion was laundered globally through crypto in 2023. Oh, right, but the dude in the Financial Times is great. He's right. That's where all the dirty money goes. Oh, hang on a minute. The total amount of dirty money that went on through the years believed to have been laundered globally was 3 trillion. 3 trillion. So this nonsense that it's all dirty money and it's all for crooks and everything else, cash is the biggest crook. But I said before, there's more dirty money goes through London and Wall Street on a daily basis than all the rest of them put together. So at the very least, educate yourself. Now, when everything dropped the other day, so this was Ethereum. Ethereum was nearly up at 4 grand the week before, and I had lines in at 3.4 and 3.2 for Ethereum to buy. This was the crash. Well, the movement on Friday, and then we had the rebound later in the day, and now we've had a move back up again. For me, that was a buy. I think, well, I know that the previous all-time high for this was 4,950 3-4 years ago, and technically that's where we expect it to go next. I would expect it will struggle at 4,000. Bitcoin did the same thing. We had the drop before, and Pierre is very much of a mind that technicals give the lead. And what did Bitcoin do? Bitcoin bounced to the pip of 112, the previous flag pattern, 112, 55 EMA, and a trend line, all in the same area, and 61.8 fib. That is an M2 pullback. Galaxy I've just shown you, now a big holder of Bitcoin and Ethereum. And then IBIT, again, is one that you may be able to do in a tax wrapper. That is BlackRock's ETF, so you could perhaps buy that in your shares. I'm not sure whether you can buy it in your pension or not, but it's certainly one of those you can. Mara, I just shown you that Mara is one of the biggest holders of Bitcoin. They're a miner. And remember, with stocks, I only buy stocks if I can make at least 25%. So when it dropped the other day, potential for this to go back to where it was 3 weeks ago is 36%. Coinbase similarly has dropped. I don't think we can quite get the 25%. No, 37%, where it was 3 weeks ago. And again, I've explained with Coinbase, biggest broker in America, legal, and they also get half of the interest that Circle get. And again, if you're not sure about it, go back and have a look. MicroStrategy. So when MicroStrategy dipped, that was 22-25%, still a buy for me. Riot, the same. And Wolf was the other one I shared with you. And then this one was the one I mentioned that Forrest, one of my private guys, caught. And I think he caught it down here on an M2 break. This is Circle, the new one. So the IPO for Circle, as ever with IPOs, it went nuts. I did have an alarm set at 61.8. I'm going to set an alarm now down at 120. At the moment, I think it's too expensive, but at 120, I would certainly be interested to buy Circle. Okay, anything else I need to show you on here? I think that's it. Mining ETFs. No, let's see if there's any questions. Alexi says, when you use technical analysis on stocks, do you wait for closes like the Bitcoin case you showed? At what point would you start to buy? No, I put forward orders in for most things, Alexi, and certainly with Forex, I just put them on. And Alexi also said, any tips on how to identify that cheap is cheap enough? I find myself in the past waiting for the prices to go too low and missing out completely, scared to buy on the way up after being wrong at the bottom. I tend to nibble my way in, Alexi. So, for example, with Circle, if I was going to put 10 grand into Circle, I would think in terms of, where's my mouse gone? I would think, okay, I would put, well, in this case, if I was going to nibble my way in, first and foremost, I only buy a stock if it can make at least 25% to its recent high. So it can. So if I'm going to put 10 into this, I would be thinking to put 5 in now. I would then put another 2.5 in here, and then I would hope it was going to come down here, and then I would buy another 2.5. By which point I would be cost averaging somewhere around here. So that's the way I do it. So to try and remember what I said at the beginning of all of this, this is all fear and panic and people running around with their hair on fire because they don't understand what's going on. Yes, sometimes things drop further, but if you nibble your way in, then you are not going to be as scared as you are now of, not buying at the bottom, etc. Khalid said, you mentioned about YieldMax ETF. However, it seems they give return of capital as part of the monthly dividend. Is it still wise to invest in them? Khalid, it's high risk, but it's high yield. And I bought at a very low price, so I was okay. But my Coney and my MSTY have both dropped a lot weeks, and therefore the NAV value is being eroded. But they don't all pay return on capital. And if you have a look on X, there are a few people on there who, one of whom is an accountant who has explained it in more detail. It's not the normal return on capital like you would expect in the stock market. So you need to do a bit more digging around on that one. But some of them, if you have a look at YieldMax, let's have a look here. I was looking the other day at this. I said that I can't remember which ones, but when they pay a dividend, it tells you how much has been return on capital, and I think it's in here. Let's have a look. So I don't want to look at Tesla and Nvidia. Let's have a look at Nvidia. Yeah, so here the most recent distribution contains 95% return of capital. Well, that's dreadful. No point to be in it. But I say, if you dig deeper and have a read, I haven't got all the data to hand at the moment, but it's not how you think. But some of them, I think maybe ULTY is one of those that didn't have any return on capital. The main thing at the end of the day with this is, I mean, what I'm looking at, I am averaging about 85% return in terms of dividends, and then I am watching the NAV value, and if the NAV value runs around too much, then obviously I would leave it alone. QDTY only paid 7% return on capital, and SDTY 0. ULTY, I mean, ULT is one of the good payers. Well, it paid 100% return on capital. That's terrible, but it's not what it means. So look in more detail. YMAG and YMAX didn't pay any, nor did AMZY linked to Amazon. And also, I'm not familiar with this one. So dig deeper, but have a good look round and yeah, understand it more. Alexis says, thank you for the answer. Do I have any concerns it may keep dropping? No stop loss, free to do. No, of course it can. Of course it might keep dropping. At some point I have felt all along there's going to be a crash. But the reason why I said earlier why I'm okay with it, because as I'd mentioned in one of these articles, I can't find the damn thing now, but when it dropped, I wasn't worried because my gold and silver went up. So in April, probably can't find it now. In April, if you go back through all my posts in here, you will see that I think it was in April. My VPN's playing at the moment, so I don't go back any further. Oh, Trump crash, my portfolio is up. So the way that I've done it, and the way that I explained this again in detail, I have probably 30 to 35% of my assets tied up in gold and silver, including miners. I then have 25% in crypto, which at my age is far too much. And then I have 25% in stocks, but some of those stocks are gold and silver miners. So when the stock market tanked in April, my gold and silver went up. So I was actually in profit. So rather than using stops and getting taken out all the time and seeing your capital erode, I'm balanced. So if I was starting again today, and I did this with a private client the other day, I said, right, if it was me now, I'd do it 50-50. I'd do 50% gold and silver. I have twice as much silver as gold for reasons I've explained before, but 50% gold and silver, including the mining stocks, and then some crypto stocks, and some general stocks. And then if the stock market crashes, gold and silver will go up. And I've shown this before. In 2008, the stock market crashed 60 odd percent and took 5 years to get back to where it was. Gold only dropped 30%, but it only took a year to get back to where it was. And then in the following 2 years, it tripled in value. So it's this thing all the way through. And again, if you go back through here, my VPN won't allow me to do this now, but if you go back through, this is what I've explained all the time. This is, and again, we go back to the beginning, risk on, risk off. So I have some risk on assets and some risk off assets. That's the way I do it. Again, not financial advice. I am not a financial advisor in any part of the world. Right, let me have a quick look, see if I mentioned any questions. Another question to Alexis earlier, how to identify if something is cheap enough. Say, my rule of thumb, I will not buy a stock unless I believe technically it can make at least 25% in the short term, in 2 to 3 months maximum. And I only buy a crypto, usually, if I think that it can make 35%. The exception to that rule is Bitcoin, and to a lesser degree to Ethereum. Right?